strategy. So today I'm going to be talking to you about how to become financially free. That's what everybody wants. How to become financially free. How can I become financially free? Well, we need to understand that what is financial freedom? Financial freedom is basically when you have income that is not related to your work, to your time. Now, many people change their time for money, but if you can't give the time, you're not going to get any money. So the point here is that you get your income without having to trade it for your time, all right? And once that income is the same or preferably more than your expenses, then you are financially free. And this will have different levels for different people. Somebody who has 1,000 euros a month in expenses only needs to have 1,000 euros or 1,100 to be financially free. If you have 5,000 expenses, well, you need a little bit more than 5,000 to be free. If you have 10,000, you get the point. All right. So that's the thing. Now, when we're talking about financial freedom, we're talking about having assets that are working for you. Okay. Assets working for you. This is very important. What is an asset? I mean, an asset is something that generates cash for you, that liberates cash flow for you. All right. And so it is producing an income for you, and that is an asset. Okay. So of course it may have some expenses attached to it, but provided that the income is bigger or higher than the expenses, it is an asset. So it is liberating, contributing to your monthly cash flow. So, all right. So you need to put assets working for you. Now you can have different types of assets. I'm not going to talk about the assets themselves. I'm just going to talk about, let's say, the big trends. You can go for cash flow, and that, of course, is an asset. So you are investing in different types of assets that are generating cash flow. That is great. And you can also go for capital gains. Now, if you go for capital gains, they are not an asset until they start generating cash flow. All right. This is very important to understand. So the cash flow assets, let's say you buy a home, a house to rent it out, and it's generating cash flow. That's an asset. Now, if you invest in a company and you're not getting anything back, well, you have some value there eventually, but it is not considered an asset from this perspective. Okay. And the perspective we're looking at is from a cash flow perspective. All right. So, but sometimes, capital gains, you can invest in different types of vehicles for capital gains. You have cryptocurrencies, you have startups, you have, many different things. And you just wait until it is time to sell. And from that moment on, then you can generate a capital gain. Now, it doesn't necessarily mean that you are going to generate a capital gain. You may make a loss in some cases, but eventually, all things going well, you will make a profit. So that is very important to understand, because these profits can be totally asymmetric. And what we mean by asymmetric is that the return is completely disproportionate compared to the investment. For instance, let's say you invest in a startup, you put in 1,000 euros, and after 10 years, the company is listed in the stock market, and all of a sudden, the shares you bought for 1,000 euros are worth 100,000, 1,000,000 or more. And this has happened again and again and again. Okay, so it is important to understand that. It's also a very high risk situation, but it can be a high reward as well. Okay, so keep in mind, you have cash flow is an asset because it is generating cash flow. Capital gains, until it starts generating cash flow, it is not an asset from this perspective. All right. So that's very good. All right. So how can you accumulate assets? Well, there are not that many ways to do it, but you need to start building a portfolio. All right. And when you do that, you need to prepare to build a portfolio that is diversified in assets and diversified in asset classes. All right. So you don't want to put, like the saying goes, all the eggs in the same basket. You want to have different baskets where you put the eggs, and you want to have more than eggs. You maybe want to put some apples, you want to put some pears, you want to put you understand, so that it is diversified. All right. So again, we're looking at, when you're building a portfolio, you're looking at cash flow and capital gains. Cash flow are assets generating cash. Capital gains are investments that you make, hoping that at some point they will increase in value. You will be able to sell and make a profit. Sometimes those profits can be life changing. Let me give you a quick example. Imagine you had invested in Facebook when Facebook just started, back in 2004, and you had invested $1,000. And once 8 years later, when Facebook went to the stock market in 2012, well, the value of those shares you bought for $1,000 was $21 million. Okay, so this is completely crazy. But there are many companies like that. Okay, and sometimes not $20 million, but it can be from 1,000 to 100,000 to 1 million to 500,000. I mean, this is fantastic, and that's what we're looking for. All right. So when you are building your portfolio, I mean, this is what you're looking for. For that, you need to develop your Q. Okay. All right. And that will allow you to improve your ROI. So we'll have the return on investment, okay, the ROI. And for that, you need to improve your financial IQ. Now, because when we're looking at that, the returns from traditional investments are poor, okay? If you look at bank deposits, where you get no interest, basically, inflation, you have the banking fees, you have insurance sometimes you have to pay. And for that, the returns are very, very poor. So what are the alternatives? You need to have alternatives. For that, you need to develop your knowledge, your skills, and overall your financial IQ, your financial intelligence. All right?